Hi traders, it's Alberto. This is the first lesson for Pro Traders Workshop series. This lesson is price action and / pip blocker video series. So we are looking for trade setups on a 4-hour chart, and then we use the pip blocker indicator to confirm what we see in price. All right. So there are two things that are important when we use this strategy. Is number one is price action, which is essentially candlestick reversal patterns. So let's focus on one candlestick pattern, which is called a bearish engulfing candle. Notice in an uptrend, price turns around and prints an engulfing candle. This candle is exactly completely engulfing the previous candle, and it should. So somehow they messed up on this chart, but I'll show you a bearish engulfing candle. So it signifies a peak or a slowdown in price movement and a sign of an impending market downturn. Okay, so the lower the second candle goes, the more significant the trend is likely to be. So let's look for a bearish engulfing candle. Okay, so I'll go back in history and I'm looking for bearish candles. So here's one here. And Smart Trader Indicator, which is a free platform that you can download. And as soon as I put my cursor on that red candle, it just tells me what it is, a bearish engulfing candle. So I need a few reasons to take this trade. Notice this trade, this currency, pound Australian dollar, has been in an uptrend for quite some time. And then what happens? And again, I'm looking for 3 or 4 reasons to take a trade. Bouncing off the resistance level. Finally, we have a bearish engulfing candle, which is a reversal. And then the second thing I need is a stochastics to be up near 80, and it is. Okay. Then the third thing is that I look at another time frame, maybe at the 8-hour chart, and see if there's something on the 8-hour chart that is telling me the same thing. And this is what is called an evening star, or spinning top. Then the next candle closes below. So that's this whole area is a strong resistance level. Okay. So I have something on 2 time frames telling me the same thing. Stochastic is overbought, notice down here. And we have resistance levels, almost like a double top. The next thing I do is draw a trend line connecting swing points. And price breaks below. Notice that it goes back up to retest the highs before it turns around. I would have taken this trade on the break of the trend line. If I go to the 4-hour chart, I would have taken this trade at the break. Notice that this candle closed below the trend line, and my stop loss would be above this candle. Stochastic overbought. Take your trade. Or a more aggressive approach is just take the trade when the bearish engulfing candle is formed. Stochastics is overbought. Then take your trade on the next candle. And this trade put in what? Over 159 pips. Okay. Just based on this bearish engulfing candle. So price action candlestick patterns will give us a clue as to what's going to happen in the future, even before a trend line break or any moving average line that you may be using. Okay. Then the next thing I do is go to pip blocker indicator. So oftentimes you'll receive a signal if you're not at your computer, and a signal will be generated, and this is February 4th. So let's look at February 4th. There's the trade right there. February 4th, February 5th. There it is right there. Pip blocker generated a sell signal on the 1-hour chart, and the exit was down at the bottom at a support level. And even though it turned around and went north, what happened? It just stalled out at a resistance and went back down to the support. Okay, so let's look for more examples of bearish engulfing candles. This is the pound New Zealand dollar. And notice this candle here, it's red, and it engulfs the previous candle. But also this three candle pattern is called an evening star right here. Evening star is three candle pattern. And it indicates a reversal of an uptrend. This is particularly strong when the third candle erases the gains of the first candle. So this candle is like a shooting star. So I'm qualifying these trades. I need at least 3 or 4 reasons to take this trade. And stochastics indicator is overbought on the 4-hour chart. Notice that this trade started all the way back here on February 4th and then February 18th. I count the number of pips from the swing low to swing high. That's 531 pips. So I take a trade after this candle is complete. This is, again, this is an evening star. It's a reversal pattern. And there it is right there. And let me highlight this candlestick pattern. Let me go to the 8-hour chart and see if there's something similar there. Again, I'm looking for a lot of reasons to take a trade. Now, the 8-hour chart is giving us what is called an inside bar. Notice that the candle is in the body of the candles inside the previous candle. That's a reversal candlestick pattern. Also, stochastics is overbought. The fourth thing is that I connect all the swing points and notice the body of the candle closed below the trend line, and that's my sell signal. It retraces to a Fibonacci level, and we'll get into Fibonacci's at a later date. And there's the trade. Found support. That's our exit. Okay. Here's another engulfing, bearish engulfing candle after a long rally on the 8-hour chart. Stochastics is overbought. Bearish engulfing candle. Notice how price retraces before it goes back down. So normally I would take a trade at the next candle. But oftentimes, and this is very, very common, when you see a huge candle like this, there's always that retracement, about 50% of this candle. That would be the entry. Of course, my stop loss is all the way up here, so there's no chance I'll be stopped out. Okay, so if I took this trade after the retracement, or even if I took the trade after the next candle, this still is about 135 pip move. Okay, so let me look at the daily chart and see if there's anything on a daily chart that can help me with this trade. And we have a bearish engulfing candle also on the daily chart, and stochastics is overbought as well. So I have confirmation on 2 time frames. And let me see if on the 4-hour chart, there it is. On the 4-hour chart, that is an inside bar. Trendline break. Nice trade to the downside. Okay, the bullish engulfing candle is similar to the bearish engulfing candle in the opposite direction. We're looking for a candle that engulfs the previous candle after a long downward trend. So let's look for bearish engulfing or bullish engulfing candles. Okay. And here's one right there. We have price on pound New Zealand in a downtrend for about 590 pips. And then what happens, we have stochastics is oversold. We have a bullish engulfing candle. Again, the candle here engulfs the previous candle after a long sell-off. And that's what we see here. Just make it bigger for you. Notice that this candle engulfs the previous candle, and stochastics is oversold. Okay. And let me highlight that because I'd like to have at least 3 or 4 reasons to take a trade. This is enough, but if I can find something else that can help me with this trade, then I will Look at that. So let's look at the 8-hour chart and notice that stochastics is also oversold. And instead of a bullish engulfing candle, we have an inside bar. That is also a reversal candlestick pattern. So the body of the candle is completely inside the previous candle, and we would take the trade on the next candle. And there is the trade up 433 pips. Obviously we may exit earlier. I probably would have exited here because it is hitting a previous support and that turns into resistance. So notice how it took 8, 16, 24 hours and then failed to sell off and just broke and went up higher. Okay. Let's see if we have any. Again, we have a sell-off right there. Pound New Zealand puts in what? 332 pips to the downside. Generates a bullish engulfing candle right there. So I need to qualify this bullish engulfing candle, making sure stochastics is oversold down at 20. Bullish engulfing candle, take your trade on the next one. Notice that it retraces, and this is very typical of price after a reversal candlestick pattern is generated. It rallies, comes back down normally to a Fibonacci level, and then turns around and heads north. Okay, here's another one. Price went down, what, about 476 pips. I qualify the trade. Bullish engulfing candle, stochastics is oversold, and there's a nice rally to the upside. Okay, the next candle is a hammer. Okay. Hammer shows that although there was selling pressure during the day, ultimately a strong buying pressure drove price back up. So the color of the body can vary, but the green hammer indicates a strong bullish or a strong market than a red hammer. So let's see if we can find hammers. Well, here we have a combination. We have an inside bar of what is called a bullish piercing line, but we have a hammer as well right there. That's a hammer. Now a hammer needs to price the next candle to close above or break above this hammer to qualify it. So you need to have a hammer and then you need price to break above. And then of course we qualify the trade. Stochastics is oversold. That's a good entry. And look at this trade. Just continued to rally for like 400 or 500 pips or more. That was like 723 pips to the swing high. 4-hour, 8-hour chart, hammer. The higher the time frame, the more powerful these reversal candlestick patterns are, okay? Let's see if we can find a few more. Here is another hammer. And again, the body of the candle, or actually the wick, has to be at least 3 times longer than the body of the candle. We qualify the trade, making sure stochastic is oversold, and we take a trade on the next candle. Now, not every trade is going to be the same. This one went up 115 pips, retraced, but it never closed below the body, or rather the wick, where you would put your stop loss. Came back down to a support level and then rallied and then continued to rally. That concludes part 1 of the price action pip blocker video series, and part 2 I'll go into more different candlestick patterns and pip blocker strategies. Thanks for watching.